If you can read candlesticks, you can read the market. Every move price makes, every rally, drop, or reversal is printed right here in these candles. Once you understand what they're saying, trading stops feeling like random guesswork and starts feeling like logical reasoning. So in this lesson, I'm going to break down candles in the simplest way possible. No complicated terms, just what you actually need to know to understand how to read price confidently. A candlestick is simply a visual story of price over a set amount of time, depending on the time frame you have selected. Each candle shows us four things: the open, the low, the high, and the close. That's it, nothing fancy. Every candle is a battle between buyers and sellers during a set time period. There are only two parts you need to understand: the body and the wick. The body shows us where price opened and closed. This informs you which side won the battle. The wick shows how far price traveled before getting pushed back. Think of these like rejection points or failed moves. Price reached these points but failed to close there. If price closes higher than it opened, that's a bullish candle, which means the buyers won. If price closes lower than it opened, that's bearish and the sellers won. Green candles, or in my case blue, are bullish up-close candles. That means strength upwards. And red candles, or in my case gray, are bearish down-close candles. That's strength going down. Now, here's what gets interesting. Size matters. Pause. Really though, big candles mean strong momentum. Small means there's hesitation or consolidation. When you see big candles, the market is known as more volatile. If they're smaller and consolidating, the market is more indecisive on direction. Long wicks tell us price tried to go somewhere, but failed and got rejected. For example, if price shoots up, but leaves a top wick, sellers stepped in hard. If there's a long bottom wick, buyers defend that level. So wicks basically tell us where the market said no or not yet. Here's the mistake beginners make. They look at a single candle, but candles only make sense in groups. Candles form structure, structure forms trends. This is what we'll be going over in lesson 3. I would suggest logging into TradingView and getting familiar with identifying these on your own. I'll run through some with you now. You can find a link directly to TradingView in the description below. Notice these blue candles here, they're bullish, not just because they're blue, but because the close of the candle is higher than when it opened. Moving on to the bearish side, they're bearish because the close is lower than the open, not just because of the color. And you see this wick here, that's a strong rejection where price is saying no or not yet. You can also see how big these candles got. They're very volatile compared to the prior versus how small they were coming in leading up to this bigger move. Consolidation usually leads to a bigger move later. That basically sums up candles by themselves. Candlesticks aren't complicated. It's two parts made up by 4 periods in time. Body shows who won, wick show rejection, and size shows the strength. That's all the basics you need to understand on how to actually read one. Now that you understand, you can start to comprehend what the chart's saying. So in the next lesson, we'll take this one step further and go over market structure like highs and lows, identifying trend. That way you can start identifying direction and not just the candles. So I'll see you guys in phase 1, lesson 3.